All right, so today we're going to be taking a look at my dividend investing portfolio. You can see right over here, we are sitting at $24,555. The market was kind of down this last day. You can see here our total gains is negative $251 for the day. If we look at the week, we are negative $132. And then if we go to the last month, we are down 722. Now, I do want to kind of preface this as well too for anybody who kind of sees this large, current value on the portfolio. I do like to show people here in my all-time. Check this out right here. For the value over time, I started with $100 in my portfolio. So if somebody is kind of worried about getting started with a little bit of money, fear not. A lot of these cool platforms like M1 Finance that I'm currently using allows you to actually invest in fractional shares, which gives you the opportunity to invest small dollar amounts. So you can see here, started investing, try to figure out where my portfolio is going to sit and how I was going to build it. And then once I did get more comfortable, I started investing a lot more. So you could definitely do the same as well. If you guys want to check out M1 Finance as well, I'll have a link for them in the show notes down below. Gets you a nice little bonus for using the link and helps support out the channel. So let's go ahead and take a look and see what I recently purchased into. So I did a couple buys already for everything that's been going on with the market kind of fluctuating a little bit. So you can see here on Monday, March 1st, I did pretty much $200, did 10 buys. Pretty much all of this, I just kind of let it do its own thing overall. And so what that's going to actually allow it to do is invest in the companies that I may be undervalued in. So right now it did Apple, my S&P 500 index fund, Texas Instrument, Lockheed Martin, Home Depot, Microsoft, Johnson & Johnson, Amazon, new residential investments, and then Ross right over here too. So a couple of really good buys for $200. It always seems like it doesn't split it, too far. I have 27 stocks overall. 26 stocks and then one ETF. So it definitely did a decent amount of buys here, but still not obviously a huge chunk of it. So with Apple being one of the bigger ones, bought 0.311 shares at $124 a share, or the share price was $124. So that was that day. And then the next day, which is the second here, right now you can see here I did about $120 in deposit, and then we had some dividends come in, which I'm going to add these here to my dividend spreadsheet. So you can see these buys right over here. We did a little bit of a manual buy on Apple, a little manual buy on Amazon here, and Home Depot. And then I just let the rest kind of do its thing. And it looks like it mainly went into my REITs, which was a little interesting. I don't know if I would have preferred that personally. I probably would have done something a little differently. But sometimes I let M1 do its thing. Other times I try to do manual buys. So with Apple here, this one was priced at $126, so I paid a little bit more than yesterday. Got about 11% of one share there. Oops. Let's go back here. So then the biggest deposit here today was Digital Realty Trust. So this one, share price is $133. Pretty much bought 27% of one share. Their ex-dividend date is coming up soon. So I was happy that more was going into that one. Same thing with Home Depot. This one I did manual though. So this one I bought in at $261, and that right there was 0.095 shares, so about 9% of a share. So that was a really nice thing too. So for me, I've been doing more deposits every single week because of the way the market's been going. When things are down, I tend to buy more, and when things are going up, I tend to slow down on my purchases just because I figure like I want to get the most value out of my stocks. I tend to go into my holdings here, and I'll click on my unrealized gains. You can see what's doing really, really well. So I got like my Discover and my Ally. Those things have taken off like crazy. My percentage return right now is actually higher than Tesla, which is kind of funny. Obviously, if I knew better, I would have bought more, but I have 7 shares of Discover and about 13 shares of Ally. But if I click this again, it'll go to my unrealized gains, so I can see everything that is kind of down in my portfolio. So we definitely got some red here. As you can see, I'll go ahead and highlight all that. So we got quite a bit of red. Some of this is more recent because of the market dropping. So we got like Amazon down here, Texas Instrument. What else we got? P&G and Pepsi were both more recent ones down here. And then Next Air Energy, which you could see is just barely in the red. But we've had a few in here for a little bit. Lockheed Martin, I can't even cut that there. AT&T and Digital Realty Trust have kind of been in this red for a little while now, and I actually been buying a lot more into these companies while they've been in this slump, hoping that obviously long term they're going to kind of recover, but then I'm also getting a better price point on my dividends because I'm a dividend investor. You saw the title of this portfolio is Dividend Dentist. So I definitely am really focused in on making sure that I'm building up a foundation with dividends. So for these companies, I'm still seeing some opportunities. Not so much with AT&T. I think I'm going to hold off on them. I don't even know if I'm going to keep them or not, to be 100% honest. They didn't do their dividend raise, which if we go back onto Seeking Alpha, let's load this up. So with Seeking Alpha, let me actually move myself down. So we can go to their dividend tab here. So they've been raising their dividends for 36 years, but their average has only been about 1.93%. So it's been pretty abysmal. And we were expecting, I think, a dividend raise this last announcement, right? Because actually back in December of 2019 was the last time they actually raised their dividend. So if we look here, yeah, nothing got announced back in December. So it's staying steady, which is not terrible because it's obviously better than it getting cut or suspended. But when all these other companies, even with everything that was going on in 2020, were still raising dividends. Not getting anything is essentially me going down in value with what I'm expecting to get paid out, because 52 cents, I can't even highlight it. So getting 52 cents, when I get paid out is, obviously the same payout as I was getting back in December of 2019 or whenever this payout was, which was what? February 3rd. So that's 2 years of getting payout the same, but inflation has still gone up. So my money is actually worth less now than it was back then. So my 52 cents now is worth less than the 52 cents I was making back then. So that's a reason why dividend increases are so important, is because I don't want my money to become worth less. Even a 2% increase is just barely keeping up with inflation. Sometimes it's actually still under inflation, but it's better than my money being worth less than it is now. So that's a big reason why I'm really hesitant on the whole AT&T thing, just because of the slowdown on its growth, and I don't like that. I also have Digital Realty Trust. They actually just announced, and I talked about this in my last episode when my internet went down here. So Digital Realty Trust here, this one right over here, just did a dividend increase right here. It says 3.6%. So this is definitely, keeping up with inflation, a little bit higher than that. I would like it to be more, but sometimes I just can't complain on every front there, obviously. So with this right over here, we're going to have our money working for us. So now we're making more of it. And I shared in the last video, we're making 4 cents more per share. You can see it was $12 now, or $1.12. Now it's $1.16. So 4 cents more. I own 5 shares, 20 cents extra that I'm going to get paid out for the dividend. And I know that's not a lot of money, but 20 cents now plus 80 cents I can't even talk. 80 cents total in a full year is a healthy amount of growth, especially for the amount of shares that I have. Now, if I had 100 shares or 1,000 shares, that number would start growing even more exponentially as far as how much that 4 cents has an impact on my portfolio. So for me, I love these dividend increases because it really kind of goes to show that, long-term investing can be very impactful for you with your dividends if, you have good companies and them continue to grow. Lockheed Martin, again, is another one here. So I'll show you here. So right now they're still down in my portfolio, almost 5%. No, there it is. Okay. So let's go ahead and load this up. So we're still on the news page here. So you can see they recently announced, what was this? Back in September. I say recently, but that was a while ago. They announced an 8.3% increase. So from $2.40 to $2.60 as far as payout. And that's pretty huge, right? Like that's a huge increase. And I didn't do anything extra. I'm just getting that. Now, I don't have a lot of shares. I have like a little over 2 shares. So again, that's not a lot dollar amount wise, but percentage is huge, right? Way bigger than even the DLR increases. And so for me, that seems like a really good way to go, especially with it being lower in the price right now, because we can look at its performance right over here. So we can see over the last year, it's still down about 9.8%. So we're right over here. If we go to the last 6 months, we're down 13%. So I was talking about how I've been buying in during the dips. So I started buying in a lot more around this time here, end of October, early November. And then even though it kind of creeped back up a little bit, then it started dipping, I kept buying more in just because, again, I'm long-term with this company. I mean, check out the PE ratio is only 12.66 there. And then where are we at with the dividend? Let me go back here. So the dividend is a 3.12 yield, 40% ratio, payout ratio, which is fantastic. Means that there's a lot of opportunity for long-term growth. And then the 5-year growth rate is 9.68%. Yeah, 9.68%, which granted the last dividend increase was lower than that, but it was still not too far off from before. So that just gives me high hopes that we're going to continue to see the dividends paid out, continue to see dividend growth over time. And I'm just getting at a really good price point now because the market has been down for Lockheed Martin in general. So that's kind of the focus I look at when it comes to going into that. We can also take a look here. So I talked about in my last video the amount of dividends I earned for the month of February. And so far for March is expected to be a really good month because usually the third month in any given quarter is the highest month, most payouts typically from companies. So we're going to see some really good payouts total. So far, just from the first, I got 60 cents from Visa and $5.61 from Aflac. So that's pretty exciting. I'm, obviously going to continue to be adding these up. You saw earlier, this went right into the next buy on the very next morning. I added a little bit extra money in there too, just to kind of get that money flowing in. But every time I get dividends, I am constantly reinvesting those into the portfolio. So we got, what is that? $5.61 plus 60 cents. So that's $6 and what, 20 cents? 21 cents. So $6.21. I'm going to add this in here. Let me move myself around here. What was that? $6. What did I say? 6.21? I think that was it, right? Let me double check. Yeah, 6.21. Okay, so right over here, this is my dividend spreadsheet. If you guys are interested in this, you guys can check out the link in the show notes down below. I'll have it available for you guys entirely for free. Currently, yeah, so 6.21 is what I have. I've already surpassed what I made in March of 2020 with only 2 stocks, and I still got a bunch to go. And you can see here, we already... Let me actually get my marker so you guys can see this a little bit better. So this is Q1 of 2021 because March is obviously in the first quarter. We already destroyed Q1 of 2020 and Q2 combined if you wanted to. And because of this first deposit here in March, we've already completely annihilated, well, not annihilated, but we surpassed Q3 of 2020 of the 63.21. So we've now already made more in Q1 of 2021 than we did in Q3 of 2020, which is awesome. Incremental growth is really important in this process when it comes to getting our dividends going and building up everything. So I'm going to suspect that we're going to get very close to what we made in Q4 of last year. So that'll be really exciting. Long-term investing is all that I do. I mean, I do some other, riskier stuff as well too on my Robinhood account. I can show you guys in different videos, but in this one, it's really just all about the dividends, right? Like trying to build up this portfolio to not only have decent growth, I have a little bit of growth in there too. And you can see here my all-time, I'm almost up $3,800. But I'm also trying to focus in on dividends. So in like 10, 15 years, if I want to, I can start pulling some of the dividends out to pay for lifestyle or pay for adventures or pay for whatever else I want to do. But that's just up to me, but I'm doing that now, so I don't have to worry about that down the road because right now my dividend yield is much lower than a lot of people because they go for like that 4% stuff. I'm totally fine with 2-3% dividend yields as long as I see some really good dividend growth coming year after year from these companies. But everybody's different on their style and what they want to do when it comes to investing. But I think the best thing you can always do is constantly learn about the process, right? Keep learning and growing and figuring out which way works best for you because it's always different for every single person. So the best way to do that is to keep on watching and keep on learning. So I'm going to have my video down here so you can check that out and continue to learn the process with investing. My name is Dennis, and I'll see you in that next video.